Good day, ladies and gentlemen, and welcome to the show on this Friday, the 10th of December, 2021. Thank you for tuning in. Now, I'm going to tell you guys, this show is going to be a little bit different today because I threw my back out. That's what they call it. Well, I was shoveling snow, stuck my shovel in, went to pick up a heavy lump of snow, and I felt my back pull. Well, all the rest of the day wasn't that bad. But now, I went to bed tonight and I woke up this morning and oh my gosh. Anyway. So, I'm doing the show and I'm just recording it on audio only. But I got a lot to talk about, guys. What's happening out there? Evergrande has went into default. It's official now. But, the markets are not really reacting to it that much. If we take a look at the Dow Jones today, it's up 32 points on the day. All of the markets are in positive territory today, including crude oil. Crude oil's up 62 cents on the day so far. Looking at bonds and rates, the 10-year yield is dropping today. It's dropped 1 basis point to 1.46. And silver is up 14 cents. Gold is up $5.80 today at $17.82, and silver's at $22.16. So we're not seeing an awful lot of reaction in the markets today to the news that Evergrande has basically collapsed. Well, it's went into default. It's not just Evergrande; it's a number of other Chinese. This is setting a cascading effect into motion that could take quite a little while before it plays out. But it's not going to get better. It's going to get worse. At the same time, what we have over here going on is here in Canada. It says Ottawa. Finance Minister Chrystia Freeland says the need for MPs to approve a new round of pandemic aid has become more important amid fears related to the Omicron variant of COVID-19. Speaking to the House of Commons Finance Committee, Freeland says the variant has injected renewed uncertainty into the economy and arguing for the government's latest benefits package. You see which way this is going? Yeah, okay, Canada's one of the first countries, and this is kind of early, to push a pandemic aid bill. It's kind of early here in Canada, but I think other countries are going to follow suit very, very soon. I think as this new variant spreads, I think that it's going to put a tremendous downward pressure on the economy. And in turn, to respond to this downward pressure, they're going to need one country after another. You'll find it very quickly, I think, once this, in maybe a couple weeks from now, that they're going to go back to pandemic aid. And what this basically means is it could actually even possibly come down to more stimmy checks coming. It could actually come down to that. Now, I'm not sure yet, and don't quote me on that, but I've been checking into this new virus, and this is really a new virus. This Omicron is actually, it is a CoV2, it is a COVID, but it's so different from the other viruses, the other COVIDs, in so many ways. Even the symptoms are different. That what we're dealing with is something that is so different that it's going to spread. It's already spreading. I mean, this is pretty obvious, Now, to what point? Because this is on an exponential, it's spreading exponentially. To what point is this going to cause the governments to have to go back into these stimulus measures again? I'm thinking it's going to be in a big way. And what effect will that have on the economy? Well, we all remember what happened at the beginning of the original COVID crisis. The economy especially the Wall Street side of the economy, has been stimulated up to where it is. Housing prices, everything, you name it, car prices, prices on everything have went up because of the tremendous amount of stimulus that was required to get us through this virus, and now it looks like more is going to be coming. So basically it's a similarity between what happened before and what happened again. And what did we see happen? We saw the markets go downwards at the beginning of the COVID crisis, and right now we're in this period where the markets are just barely holding their own. Plus we got the Evergrande thing happening with the Chinese are going to start to have difficulties. Let's just call it difficulties as dominoes begin to fall in the Chinese property market. We're getting these two things are starting to come together at the same time, and what it could yield is a tremendous boost in inflation in the upcoming months. Now, the United States inflation jumps to 6.8% in November. It's the fastest rate in 39 years. Okay, inflation jumps to 6.8% in November, fastest rate in 39 years. U.S. consumer prices rose at the fastest clip in nearly 4 decades last month, underscoring the persistent elevated inflationary pressures on the recovering economy. Labor Department's Consumer Price Index, CPI, climbed by 6.8% in November compared to last year, marking the fastest annual increase since 1982. This rate matched consensus economists' estimates according to Bloomberg data, but accelerated compared to the 6.2% year-over-year rate from the prior month. So instead of 6.2%, now we're at 6.8%. Now you got to understand, these are the government numbers. What's real inflation running at? Generally higher, because of the way they index inflation now is set to the low side. So 6.8% is absolutely astounding. If we realize that the Fed was talking about a 2% target, and now suddenly they got 6.8%, yeah, they're talking about taper. But at the same time, we got this oncoming virus coming in. And you know what this is going to yield? They can't let the entire economy completely collapse. They're going to have to support it. It's as simple as that. And so this hasn't happened yet. I say yet. But looking out a few weeks into the future, I can see that these supportive measures for the economy can be ratified rather quickly. Especially if there's a crisis situation. So, what else have we got going on? Stocks rise as investors digest largest annual rate of inflation since 1982. Investors eyed key inflation report ahead of the Federal Reserve's final policy setting meeting of the year next week. So they're going to have their final policy setting meeting of the year next week. I just wonder what's going to happen in that meeting. So we got more to talk about here. It says the inflation data was bad as expected. What it means for the Fed and for Biden. Inflation data is expected to prompt the central bank to move more quickly to tighten monetary policy. Well, you know what? Those two things don't go together. Tightening monetary policy and loosening monetary policy doesn't go together. And so we're in a transition right here, and I think this transition is going to happen very quickly from a tight policy, which we have right now, to suddenly a loose policy again, while inflation is on the uptick. The Turkish intervention on their lira, the lira is sinking now to the 14 mark. I guess that's 14 to the dollar. Turkish policymakers failed to arrest the lira's fall with their third intervention this month, as the currency quickly, I guess, dropped. It says next year will be tough for credit markets, with one major exception. The next few years promises to be volatile in the credit markets as interest rates start to rise. Yeah, we haven't seen this yet. See, these are the expectations right now. The expectations right now is of a Fed tightening cycle and interest rates rising. Okay, that's your expectations. But what's really going to happen in real life? It says the next few years promise to be volatile for credit markets as interest rates start to rise, but there is one asset class that's set to continue thriving. Read more at Bloomberg. Well, here we go, guys. I don't think you're going to have to wait real long for this sudden change to take. This is going to be a sea change. This is going to be a 90-degree change in policy. I see coming up very, very soon. As we see Omicron continue to spread, it's going to increase the speed. It's not going to slow down. It's not going to go away. It's here. It's being studied by the top scientists in the world. And one of the things that they fear is that the suddenness of it, how quick it is. It's very, 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 extremely, excruciatingly fast. It's, you see, one of the big things that concerns them is the hospital system and the medical system becoming overwhelmed by an amount of sick patients. With a disease that moves slowly, there's not a sudden surge, and this is what it was about back when they were worried. They called it flattening the curve when the original virus came in. They wanted to do what they called flatten the curve so that their medical system wasn't overwhelmed. But now this virus seems to have less severity. Seems to, I say, because it's early days yet. But the speed in which it travels at is incredibly fast. So even if the people are not, say, as sick, still the overwhelming volume of people could overwhelm the system. And this is what they're worried about. Because of the speed in which it travels at. And so we're going to have to wait and see what happens, but I'm going to tell you something. This thing is like doubling every so many hours now. It's uncertain at this point just exactly how many hours it takes to double. I've heard some assessments in the 48-hour range, and I've heard others 72-hour range and stuff like that. But still, we don't know yet. We don't know if it's like 48 hours or if it's like 2 days, 3 days, 4 days for doubling, you know. But it's somewhere in that area. You know, maybe it's 3 days, maybe it's 4 days, but it's somewhere in that area. This is what's called an exponential. And doubling means that there's twice as many people that have it just a few days later from what you have right at this moment. You know? And when you got something that's doubling like this, exponentially growing, this is what really frightens the medical community. In fact, it terrifies them, is the uncertainty on this side. Now, later, maybe 2-3 months from now, maybe they'll have a little bit better handle on this, and they'll understand it better, and maybe the fear and expectation will settle back down somewhat again, you know, maybe in a period of time. It might be sooner. Maybe they'll figure this out quicker. Maybe they'll figure it out in just a couple weeks. But until then, there's going to be a lot of worrying, a lot of trembling hands, a lot of upset as this thing exponentially increases in the world. And ultimately, I believe that it's going to reach a point after it doubles and doubles again, a few more times. It's going to start to reach a point where the nations of earth are going to the central banks are going to have to relent on their monetary policy, and they're going to have to go back to what we call printing, which is not really printing, it's just creating new monetary units. But this is the wrong time for that. This is the problem. If they go back to printing, this is the wrong time. If they go back to printing right now, this is going to end very badly. Because what's happening is we're getting into a mindset now across all the nations of earth. The mindset is prices are going to be higher next month than they are right now. And so people start to spend their money as fast as they get it. That's the mindset we're heading toward. Once you get in that mindset, once all the people of earth get in that mindset, there's no turning them back any longer. They're going to spend the money as fast as they get it. And this increases prices even higher. And in turn, the inflation doesn't stop because there's a loss of confidence in the purchasing power of the fiat currencies at that point in time. And we're getting very close to that point in time, and I believe that this new stimulus measures that they're probably going to have to put in place are going to lead us right into that territory, which leads ultimately to a hyperinflation. Thank you guys for listening. Like and subscribe, and we'll catch you guys in the next show. Bye-bye.